Hey guys, Captain Frugal here reporting for duty, and boy, YieldMax has some big changes. Their funds, a lot of them, are transitioning to weekly distributions. The information says as of October 8th, 2025, YieldMax ETFs announced a major update to its distribution framework, shifting all single stock option income ETFs to from, I should say, monthly to moving to weekly distributions starting October 14th. The goal of this is to provide more frequent income opportunities for investors, responding to demand for consistent cash flow. However, the YieldMax Target 12 ETFs are going to remain as monthly distributions. So here's some key things here. The weekly payouts reflect the natural evolution of YieldMax product line, allowing for more predictable income without altering the underlying option-based strategies, the covered calls on the single stocks, if you will. The ETFs are divided into two distinct groups that are staggered for weekly declarations. So group one will have paydays on Thursdays, and group two will be paid on Fridays. So it's going to be an interesting dynamic here on how it's going to impact things. Now, there's already a lot of existing weekly payers like Ulti, which has gained a lot of headway lately. And I wonder if this has something to do with it. So I'm going to show here on the screen the categories here for group one. As you can see what funds that's going to be impacting for group one. And now I'm going to look and show you here group two. These are the ones that are going to have Friday payments. You see there's a huge amount. So some popular ones there are like Coney and MSTY. And I don't know, these have been struggling a lot. So I wonder if they think this is going to help them in that regard. I'm not sure. But remember, the Target 12 ETFs are not going to be changing to weekly. Now, let's talk about what some investors might consider with this. There's some pros and cons. More frequent compounding is going to help for especially those people that set it to drip. They're going to be able to compound faster, and it's going to allow for better cash flow management and alignment with those weekly market dynamics. I personally, that's what I use mine a lot for. The weeklies I don't set them usually to drip. I actually use them to buy other things, but that's an option here. Still, you're going to be able to get that money faster. But there is some risks as well. So there's potential for higher perceived volatility in these payouts. So distribution may include a return on capital, which can erode the NAV over time. Now, I know some people are going to have argument over that. You take that the way you want. But otherwise, no changes as far as we know at this point to the underlying strategies. But always, it's a good idea to look at the risk. Once again, I'm not telling you what to do, how to do that. I am not acting as your financial advisor. This is just for entertainment purposes and information only. So with that said, will that change what I invest? I don't know. I don't think it's going to change my distribution, what I do in my current plan with that from monthly. It just might hopefully allow me to invest quicker into the things. Because what I'm doing is I'm using a lot of these YieldMax, which tend to be very, very risky. And I use the distributions from them to invest in more expensive investments that tend to not erode and yet still pay. So I'm using these risky ones to move into a safer base to earn income. But that's what I do. But YieldMax here is making a big change. Do you think it will impact you positively or negatively? Will this make you more interested in YieldMax? Are you still going, Round Hill's the better choice? Because there is a lot of options out there. I've been hearing a lot of people say, Round Hill doesn't have the NAV issue with erosion as much. It is what it is. I will say I'm not happy with a lot of the trends I've seen of these YieldMaxes. But when you get those, you have to remember, a lot of people, they're not thinking, you don't get these with the intent that they're going to appreciate and value a lot. What I look for personally is I want stability. I want them to maintain a value and not erode away, but still pay. And I think they need to adjust that. I think they're trying to make the pay too attractive, a little bit too high of a percentage. They can't hold up to that, and maybe reduce the pay and create a low cost way to get into this kind of market for some people that might not have the money for higher cost choices there. Well, there you are. That's my thoughts, not yours. Please have a wonderful day. Take care. And until next time, keep it frugal.